Your CPA just looked at your Wyoming LLC and said, what did you do here? Here's why. A Wyoming LLC doesn't make Illinois rent or income tax-free. And if you run that Wyoming LLC in Illinois without registering it as a foreign entity, you got liability. I'm Thomas E. Howard, a business lawyer in multiple states and a partner over at Howard East, a boutique law firm focused on business and litigation. This is a part of a short referral resource library we're building specifically for CPAs and other professionals who keep inheriting clients with businesses that have been structured by influencers on social media. We're recording a few of these and you'll have a real set of tools to forward, not one random link. In this video, I'm going to give you three things: the tax reality, the foreign LLC compliance trap, and a clean way to structure this so that your CPA doesn't want to throw your return into the former client's file. This is educational only. It's not legal or tax advice. Today's myth: form a Wyoming LLC and your Illinois or other state rental income becomes tax-free. Sometimes they may claim it's lawsuit proof, it's anonymous, and Illinois can't touch it. That pitch is built on one sleight of hand. It pretends the state where you file the LLC paperwork controls the state where you earn the income and operate. It doesn't. If you only remember one sentence from this video, your Illinois rental income is still Illinois income. Wyoming can be a management or privacy layer, but it is not a magic tax move. An LLC is a state law wrapper, a legal fiction. Taxes don't follow your registered agent. Taxes follow two things: where you live and where the income is earned. Let's do the most common scenario a CPA sees. You live in Illinois. You own a rental property in Illinois. You form a Wyoming LLC. Illinois doesn't stop being Illinois because you mailed a form to Cheyenne. If you're an Illinois resident, Illinois taxes residents on their income. The Wyoming LLC label doesn't relocate the income. It's still your income. And even if you're not an Illinois resident, the rent from an Illinois building is still Illinois sourced income. Real estate is not subtle. The property sits where it sits. In the law, we call it situs. The building doesn't move because your operating agreement has a cowboy logo and secrecy of its members. And federally, here's another detail that's constantly skipped. A single-member LLC is often treated as a disregarded for income tax unless you elect otherwise. So if the plan was my Wyoming LLC is a completely different taxpayer, that's not true either. For the basic Illinois rental example, your Wyoming LLC equals tax-free is nonsense. Now, here's where the conversation gets more useful for real professionals. If there is a legitimate way Wyoming can show up in the structure. Yes, a common approach in this is an Illinois LLC owns the Illinois property and a Wyoming LLC is used as the manager of that LLC. Then you can be anonymous. Also, sometimes it's used to centralize management across multiple properties and create a clean mechanism to swap managers or for certain administrative efficiencies or privacy goals. But this is the entire point of the video. It does not erase Illinois income taxes. It does not erase Illinois compliance. It just means that you now have a two-entity structure. And if you don't execute it with discipline, the structure doesn't protect you. It becomes a trap that your oversimplification friend on Instagram may have forgotten to mention. And that brings us to the part that influencers never talk about: compliance. It's too boring. If your Wyoming LLC is doing business in Illinois, Illinois treats that as a foreign LLC. Foreign meaning formed in another state. Illinois has rules when a foreign LLC transacts business here. People love to cherry pick the statutory list of things that do not count as transacting business as they use it as a magic shield. But here's the reality your CPA may be impressing upon you. If the Wyoming LLC is the manager and it's signing leases, collecting the rent, hiring contractors, issuing notices, managing property managers, and running the show, nobody should pretend that owning property without more, that's just operating. And the trap isn't just paperwork. The trap is leverage. Illinois, and maybe your state, has what people call a door closing rule. If a foreign LLC is required to register and doesn't, it can lose the ability to maintain its own civil action in Illinois until it cures that authority issue. Translation: You can still get your Wyoming LLC sued, but when you need to go on an offense and sue a contractor or enforce a contract, file a claim, you will hit a wall until you register and cure. That includes real-world stuff like evictions if you have a tenant who's not paying. In real estate disputes, leverage comes from being able to file clean claims and enforce clean contracts. If your own structure delays when the clock is running, you paid money to set up something that weakens you at the exact moment you need strength. But there's more. Illinois can also impose penalties for transacting without authority. So you didn't save money, you bought yourself a surprise invoice from Reality. If the foreign LLC fails to get admitted within 60 days after it starts transacting business in Illinois, the statutory penalty is $2,000, plus $100 for each month that it keeps operating without the authority because it didn't register. Now let's talk about why this advice spreads. Wyoming LLC is an easy product with an easy answer. It's simple. It sounds like a cheat code, and it gives people that dopamine hit of feeling smarter than the system and getting away with something. As our president once said, I don't pay taxes because I'm smart, or something to that effect. And the sales funnel is usually predictable. First free stuff, just pay state fees, then it's registered agent subscriptions, and then it's a virtual address, then it's compliance monitoring, then annual report filing, and then quietly, you may still need to register where you actually operate. So a lot of the time that coach on Instagram isn't selling you a tax strategy. They're selling you recurring subscriptions in the language of freedom. God bless America. Here's the adult version of what to do. If you have an Illinois property, start with a clean Illinois structure, or check the structure in your state if we're not talking about Illinois. If you want a Wyoming LLC as the manager of your Illinois LLC, fine. You want to protect your privacy, but treat it like a real business. Ask the boring questions that prevent disasters. Who signs what? Which entity is on the lease? Which entity is the vendor contracts with? Where are the bank accounts? Are funds separated? Is insurance written correctly for the insured? If there's a claim on the real estate, who's actually covered? If you need to enforce something in court, will you be able to maintain that action without delay? That aren't caused by the procedure of court. What kills people is sloppy execution, commingling, wrong names on contracts, uninsured risks, and pretending the paperwork was fine because you have a Wyoming LLC. If you're a CPA watching this because your client sent you a Wyoming LLC blueprint and you're thinking, what did you just do? You're not alone. That's the reason this exists. It's meant to be a clean, affordable resource that you can send to your client before they make the situation worse. If you want it, we have a one-page checklist called Out-of-State LLC Reality Checklist. Check that out. You can forward it to your clients before they restructure. It's free. Found this helpful, hit subscribe and drop a comment with the next influencer tip you want audited. If you want it reviewed for your specific facts before you restructure or sign anything, something you'll regret, go visit howardeast.com. Wyoming is a fine state, but your Illinois duplex is still in Illinois. And Illinois is very confident about where Illinois is. And so is their Department of Revenue that wants their taxes paid on that income.